real estate investments in Italy. Despite a strong global macroeconomic uncertainty, in 2022, Italy has shown resilience within the European context. In the real estate sector, Milan has confirmed its leadership in the market with office leasing results comparable to the pre-COVID situation, comments Barbara Cominelli, CEO of JLL Italy. For 2023, we expect a climate of cautious positivity with solid fundamentals and a recovery in volumes in the second half of the year. Living. Among the emerging sectors, the living sector reached a total of approximately 0.6 billion euros. Investor interest, both for build-to-rent and build-to-sell operations, has focused mainly on Milan and Rome, although recent transactions have shown the attractiveness of other markets such as Turin and Florence. Interest is growing in operations to convert other intended uses, mainly office use, to residential, which have generated transactions of over 300 million euros, which will therefore bring the total investment volume in the living sector to almost 1 billion euros. Healthcare, which reached 0.4 billion euros in investments in 2022, a 20% increase year-on-year, is proven to be an interesting sector in which long-term demand will be driven by the extension of life expectancy and which confirms the fundamentals as well as representing a defensive investment asset class. Potential for development, thanks to unsatisfied demand for student housing, is also emerging for student housing. At present, this sector still has relatively low volumes in Italy, but it is characterized by greater ESG implementation simplicity, is less cyclical and more able to withstand inflation increases compared to other real estate sectors. Office. The office sector, with over 5 billion euros of investments, a value almost double compared to the office sector, with over 5 billion euros of investments, a value almost double compared to 2021, represented about the office sector with over 5 billion euros of investments, a value almost doubled compared to 2021, represented about 40% of the total market. In terms of leasing spaces, the Milan and Rome aggregate recorded an increase of about 30% year-on-year in a context of increasing rents and yields. The so-called flight to quality trend is emerging, the tendency to seek accessible properties that offer a good level of livability, favoring occupiers' well-being. There is also some interest in properties located outside the CBD and in peripheral areas, especially if affected by regeneration projects and well-connected and served, part of a more polycentric urban development. Buildings that do not meet ESG parameters will tend to need redevelopment and, in some cases, conversion of use to increase their attractiveness. Thus, transformation opportunities arise from directional to other uses. Logistics. The logistics sector showed stability in volumes compared to 2021, achieving about 3 billion euros and ranking as the second asset class in terms of total share. After 9 months of sustained growth, the fourth quarter recorded a decline. From the leasing market point of view, the values were positive with a total take-up of about 2.8 million square meters. Investors' interest will continue to focus on core properties, but also on assets with reversion and repositioning possibilities from an ESG perspective. The attention towards sustainability-related parameters by investors and tenants is reflected in the content of lease contracts, which are beginning to include the first green clauses. In the data center field, it is expected that the demand for assets will continue to increase, in line with the growing trend towards digitization. The supply of new data centers will be constrained by the availability of land and electricity, pushing expansion beyond traditional hubs. Hotel. Investments in the hotel sector reached volumes of around 1.2 billion euros, confirming Italy as one of the most relevant markets for major hotel investors and operators, with a particular interest in resort and leisure destinations. The recent growth in the sector confirms a positive trend, with trending results exceeding pre-COVID levels globally. However, higher operating costs, increasing inflation, and limited access to credit pose challenges for the sector. However, higher operating costs, increasing inflation, and limited access However, higher operating costs, increasing inflations, and limited access to credit pose challenges for the sector, which will adopt a more cautious approach, despite the strong interest in the Italian hotel market seen at the beginning of the year. Retail. The impact of the macroeconomic situation was evident in the retail sector, which recorded approximately 0.8 billion euros in investments. After growth in the first 2 quarters, a decline was observed in the second half of 2022. Regarding yields in different sectors, prime net office yields in the third quarter were 3.75%, an increase from the previous quarter. Retail figures showed growth both in shopping centers at 6% and on high streets at 3.7%, while logistics was at 5%. Prime rents have increased across all asset classes. Trends for 2023. Among the most significant aspects for 2023 will be the regeneration and technological upgrade of office assets. In particular, about 80% of existing office buildings in major cities around the world will still be in use in 2050. To achieve net zero, 3 to 3.5% of existing stock must be retrofitted each year, while current retrofitting projects only affect 1% of buildings. Deep retrofitting also guarantees a significant reduction in energy costs, up to 40 to 60% for the same commercial area. Technology will also continue to play a key role in 2023 in a context where spaces are used more dynamically and portfolio composition is becoming more complex. Companies are turning to data and artificial intelligence to reduce costs, optimize investment decisions, and create a truly hybrid work ecosystem. 56% of companies plan to adopt predictive systems for facility management of their buildings in the near future to improve their performance. For more information on our investment proposals, please contact us.